In this week's update, all the stars align for precious metals. AI being grossly underestimated, follow the money. An extraordinary AI sector deals being done, and they paint a robust investment future. My name's Garry Davis. I'm an authorised representative of Primary Securities, and the information in this video is of a general nature only. The AI reality is coming at us at an increasing speed, and really what's happened in the last couple of weeks have really exemplified what has probably been known by many in the industry for some time, but is now really becoming starkly apparent because of some specific events. So I want to talk a bit about that today because it's so important. Now, over the years, you've heard me talk a lot about following the money in preference to the fundamentals, but you still need good long-term fundamentals, and you'll find those with megatrends in the most abundance. But if you can combine those two great long-term unstoppable trends in the long-term fundamentals and the money flows that go with it, then it's a really powerful combination. And I'm getting the most emphatic follow the money signals that I've ever seen in my nearly 4 decades in the market. So this really is quite a momentous period that's starting to unfold. So I guess everybody is pretty familiar with the megatrends, the energy transition, critical minerals, precious minerals, health technology, industrial technology is very exciting, defense spending. So everyone's pretty familiar with those, I would imagine. But now AI is shaping up as by far the biggest megatrend that we're going to experience in the next several decades. And quite probably the biggest megatrend we've seen in the last century. And recent weeks, and this is really the key point, recent weeks have really shifted the probabilities. It's become far more obvious, and it's raised my conviction level quite considerably. So AI investing for specialist share education members didn't start in the last week by any means. It started for us in earnest back in 2023. And we've already chalked up some really stunning results. And if you're interested, we've got a live scoreboard on our website that sets out that pretty graphically. So we've had some great results, but we're only just at the front end, really. This is going to continue for years and decades. Now, we've had some temporary loss periods as well. There were some challenging periods. March and April of this year with a tariff mayhem caused a panic in the market, and we saw the sudden irrational plunges that really only lasted a bit more than a month, and then everything very, very quickly got back to normal, and we've seen a number of US tech stocks prices double, triple from those April lows. So you're always going to get that no matter what you invest in. There will be a level of volatility, and that is almost certain to continue in the future. But look, we navigated those periods very readily, and we did that because members are clear about their plan, the purpose for owning certain things, the time frame, and they're executing well because they've got confidence building. And I've spoken about this regularly as well. Confidence is probably the most important asset that an investor can have. And if you do it long enough, if you've got a clear plan and you execute well and you do it for long enough, then it becomes a very profitable habit. And that is the part that is really starting to click in now for our members. And we're getting a lot of terrific feedback about the results. Now, it's a very rapidly evolving AI landscape. Everyone would have been reading about the incredible CapEx investments that have been made by Microsoft and Meta and Google and Amazon in the hundreds and hundreds of billions of dollars. Very much focused around data centers and the critical need for sufficient power supply to drive these things. So that is been well and truly exposed and been on the table. But just of late, we've now seen the US government take a stake in Intel, as they have in some other critical areas, such as critical metals. We also saw NVIDIA make a $5 billion investment in Intel and establish a collaboration with them to dual benefit, mutual benefit. We've seen NVIDIA and OpenAI, NVIDIA making a progressive, but overall it'll be something like $100 billion investment in OpenAI, which will be a mix of equity and also infrastructure as well. We've then got the Stargate project, which is estimated at around $500 billion to establish a network of warehouse data centers across America, and that will start to roll out by the end of the year. So this is not some thing that's years in the future. It's very, very imminent. We've got Intel and Taiwan Semiconductors establishing a joint venture. We've got Tesla and Samsung doing things on a joint mutual basis. So this collaboration between these mega players is just starting to become really quite apparent. So that is the evolving landscape, and it's really the circularity of these deals where everyone is sort of pitching in and doing these joint ventures and joint deals to everyone's mutual benefit that is really quite stunning. I can't remember a period of such intense collaboration. So with the major players, as always, you need to watch what they're doing and not what they're saying or what the commentariat might think of it, because there was a huge amount of criticism about a year ago about the sustainability of the CapEx the Microsofts and the Metas were spending. But they've continued to spend it, and they've, even if anything, ramped it up further. So it's becoming very clear that the path to success for all of these companies is to work together to shore up the supply chains. And that's why the American government is involved now as they are, because of the critical need to do that. And these companies are going to be sharing the breakthroughs. It's going to be mutually beneficial, and it's just going to accelerate the whole process. And that's what's so exciting. I just can't remember a period that is remotely like this. Now, access to capital for a lot of companies, not the really big players, but for a lot of companies, access to capital has been an issue. And certainly that was the issue with Intel. But that bottleneck, if you like, is being swept away to just unlock the incredible potential that is really starting to emerge here. We're going to have companies that have been underfunded and therefore undervalued by the market because the market didn't necessarily believe that they could pull it off. Well, those companies are now in a very different environment. A company like Intel, for instance, was probably in very, very significant risk of even surviving. But now they're in a position where they're going to be able to thrive and grow. Data centers are the hub, but they've had lots of roadblocks around the supply of energy, around being able to cool the incredible heat that's being generated in these data centers. But those roadblocks are now being removed by what the peripheral tech suppliers are doing, the companies that specialize in various areas. So wherever you look, it's just progress on steroids. So if we just look at some of the deals, just to give you a sense of the size of this, it's almost unfathomable. There's the Stargate project, which is something in the order of $400 or $500 billion over 3 years. Microsoft are planning on spending $80 billion to 2028. AWS, part of Amazon, is planning to spend $20 billion on Australian data centers by 2029. And Bain & Company put the following estimates on the table to meet what is envisaged as the compute demand as we stand, but that will probably become even bigger. And it's around and this number is just eye-watering, it's around $500 billion per annum in new data centers and 200 gigawatts of global power capacity by 2030. These are just quite extraordinary numbers. And it's the speed and the dimension of this unfolding story that really tells you about the immense confidence that all of these players have got in this transition. Now, you still need a plan, you still need a fertile environment to monetize these opportunities. These are not going to fall in your lap just by turning up and buying a stock here or a stock there or an ETF, because there are going to be significant periods of volatility. And if you look at history, companies that go on to make thousands and thousands of percent gains will pull back 40 or 50% on multiple occasions during that journey. So this is not a situation where you can just set and forget. So you still need a very clear plan, and you need to be in the right sort of environment. So for anyone that would like to be part of this journey, which is just extraordinary, and perhaps would like a bit more information, then please contact me, because this is just such a great unfolding story. All right, let's look at the US market status. We've got a strong economy in the US. Depending on the week and the data, we're getting a few mixed signals, but there's probably no question that the US economy is still reasonably strong despite the weakness that we've been seeing of late in the labour market. And that came through with the revision of the second quarter GDP was raised from 3.3 to 3.8%. So that's quite a significant revision upwards. There are inflation concerns. There's no question about that. And Jeremy Powell's been very clear. And the Fed used the PCE, the personal consumption expenditure, well above their target is 2%. It's 2.9. So the market is still not getting what it fully wants in terms of Fed rate cuts. We've still got tariff uncertainty, of course, and while ever Donald Trump is in the White House, I think that will persist. And there has to be, you would think, longer-term impacts on inflation and consumer confidence that aren't really that apparent yet. But despite all that, markets are looking ahead, and the smart and the informed money can just see the extraordinary changes underway. AI is certainly the leader in that area, but all of those other megatrend areas can't be forgotten either. So whichever way you carve it, the run into the end of the year for the US market, the run into 26, really the run through to 2030, whilst it might get very volatile, and almost certainly will from time to time, but I expect that those periods of volatility will be reasonably brief, as in a few months. It really does look incredibly robust and an incredible investment opportunity. Now, as always, we advise that you seek all the investment and financial and legal advice that you require before taking any action on anything that's in this video. Quick summary of the American market. The S&P was down a little bit, and a lot of it was around just the conservatism, I guess, of the Fed, that interest rates may not be as baked in as the market thinks. So 0.3 for the S&P and about double that for the NASDAQ, down 0.65. The Russell also down something similar. So it was a bit of a somber session in America. But nevertheless, that's the indices. You look at some of the underlying stocks and the trends were just stunning. So many really powerful trends last week. The US dollar index rose a little bit, just above 98, but the long-term trend remains down. The 10-year yield spiked up a little bit from 4.13 to 4.18, and the VIX was pretty steady around 15.3. All right, let's go and look at some charts. This is the NASDAQ on a weekly basis. So we had 3 very strong weeks with appropriate gaps as well. Bit of a pause last week. We've got a little tail, top and bottom. So it was a bit more of a balanced week than anything else, balance between buyers and sellers. Semiconductors, of course, being an integral part of what's happening with AI, had another great week. So that's the 4th very strong week that we've had in succession after a breakout, a quick retest of the breakout, and now it's charging off again. So that really does look very strong. If we look on a sector basis, not a lot of change there. Consumer services is still leading the way. Technology is right up the top. Energy made quite a sharp rebound during the week, and consumer discretionary is still pretty solid. So not a lot of change in the order there. In the Australian market, materials had a very powerful finish to the end of the week. And of course, gold did contribute somewhat to that, but also copper was strong as well. Now, XSO, small caps, or XEC, if you prefer that one, which is the Emerging Companies Index, continue to trend very strongly to the upside. So this has been the long overdue story that really goes back before COVID. So many people have been scratching their head about the relative undervalued nature of the small caps. And it would appear now that that is really being embraced. So that is the Australian market. And of course, healthcare, thanks in no small part to CSL, which the share price of CSL has fallen quite dramatically. So that has really impacted healthcare. And of course, energy has come off considerably from its leadership position now that the deal to buy out Santos has fallen over. There's the S&P on a weekly chart. So again, just the same situation, strong month before it, and then a bit of an indecision week. And that's IWM on a daily chart. So we had a bit of a significant pullback on Thursday, but then did recover some on Friday. So that's the US market. The Australian stocks, our dollar finished at 64.9. The shorter term technical bias is still really a bit more to the downside, but it could certainly spike up without too much difficulty. We've got sticky inflation that may have the RBA on hold. The market would have been pricing in some further rate cuts, so that could help support the Aussie dollar. Our index gained 0.2% for the week. Materials, as you saw, were very strong. Gold and silver were just incredible. Had a really, really powerful week, particularly silver. We'll get to that in a minute. And it's really been a very strong couple of months for XEC as well, which is the Emerging Companies Index. Turning now to precious metals, gold was up $68 to $37.54. Translate that to Australian dollars, and we're now at 57.43. This is just such profitable territory for Australian producers. And silver rose 7% on the week to 46.04. So it's really a very powerful move now in silver. Some other really interesting news that I think will just continue to provide strong support for the sector. China is seeking to become a custodian of central bank reserves via the Shanghai Gold Exchange. So, if you like, sort of a Chinese version of Fort Knox. And all these changes are just going to significantly distort what has been normally happening in the gold market. And of course, the record buying by central banks just continues to break records left, right, and centre. And we've now got investment banks, and I don't know whether this is a good thing or not, as soon as the investment banks start making predictions beyond what people expect, it's normally the end of the run, but investment banks are now forecasting gold to breach $4,000 an ounce. And in the longer term, I think that's absolutely a fair enough call, but it may just signal a short-term top. Gold stocks, despite the stunning rise that we've seen in gold stocks around the world, the valuations really do remain a bit on the light side, no matter which metric you use. And producers are still comfortably and historically below their net asset values. So there is absolutely no reason why gold stocks, particularly gold producers, cannot continue this trend that they've been on. So let's go and look at the charts around that market. We'll look at silver first of all, and that was silver on a weekly basis. So this is the strongest week that we've seen. You've got to go back to April at the end of all the tariff upheaval to find a week as strong as we have. So if we look at where the all-time highs are, we're getting rapidly towards them and not far off either. So we've now broken above this key support and resistance level. And then the next stop is around 49.5, which goes back to 2011. So when you stand back and you look at how quickly it has gone from early June on this significant breakout, early June at 35, and we're now at 46. There's gold on a weekly basis in US dollars. So there's 4 very strong weeks in a row from the breakout. And in Australian dollars, it's been held back to a degree because of the movement in our currency, but nevertheless, another very strong week. Okay, let's move on to other commodities now. Copper was at 477, spiked up a bit. There certainly are some supply issues, some in South America, but the major one was the Freeport Grasberg mine in Indonesia, where they had to declare force majeure because of operational issues. And it's highly likely that this is going to stretch well into 2026, perhaps even 2027. So that is a supply restriction that the copper market certainly didn't need. And it just shows how susceptible this market is to supply disruptions. So we've got demand increasing all the time. And then from time to time, we're getting these supply issues, and this will be a significant one. Just shows the market really is very tight. And then when you add on all of the energy transition needs, which are already well underestimated, then you can see it wouldn't be hard for the copper price to really take off and trade consistently above $5. Crude oil was at 65.19, so a little stronger. It was a bit of a mix of conflicting supply and demand signals during the week. Oh, the other thing I wanted to do, I just want to show the GDX and GDXJ. So there is the Aussie GDX index covering global stocks, some local Aussie producers, but global stocks listed in Australia. On a weekly chart, you can see just again how strongly that has moved. This ETF was trading in the mid-50s at the end of last year, and now we're trading at 112. So that index has more than doubled during this year to date. And if we look at GDXJ, which is the index that I tend to look for listed in America, on a daily basis, you can see it's been a similar, very strong move. We've gone from 65 to 96. So certainly the gold miners are doing extremely well. There's the spot copper chart. So you can see we got down once the really high tariffs on copper that were going to be imposed, once they were removed, then we had a collapse back in the price. Got down to about 440, but we're now back to 475, trending to the upside. Uranium had a good week. In fact, it's had a good couple of weeks, and that's underpinned some strong gains in uranium stocks. And there's crude oil. Not a lot changed there with crude oil. So wrapping it all up, last week I said that investors need to look through a very vastly different lens, and I presented a different lens to look through, and that was that the only stocks of interest for me are stocks that have a high probability of sustaining high growth. And that's the primary determinant that I use, and I forget pretty much everything else. Now, what is unfolding, particularly with AI, not just with AI, but particularly with AI, truly is the opportunity of a lifetime. I cannot remember in nearly 4 decades anything as dramatic and rapidly unfolding as what we're seeing right now, and also highly probable. So my question to everybody watching this video is, are you prepared to have a really proper crack at it? Because I don't think opportunities like this are going to come along very often. So that's the message I want to leave you with. Portfolio analyst this week, it's pretty obvious where I'm going to be going this week, just looking at providing more detail around the immense opportunity around AI, and it really is in so many different areas. It's not just a matter of buying some shares in the mega players and sitting back. It's much more exciting than that. And it's really about process and guidance, because whilst this is going to be an incredible journey, it's not going to be one that I suspect is going to be terribly easy to live with. So you need a strong, clear process, and you will almost certainly need perspective and guidance to get through the tricky bits, because they will happen. All right, that's it for this week. There is more information on our website, particularly our live scoreboard, which should be of interest. And there's my email address. If anyone does want to talk to me about the AI opportunity and how it can be played either as a do-it-yourself investor or having someone else do it for you, then contact me initially on that email address. So that's it for this week. I'll be back with you next Sunday. Cheers.